core of mastering trading actually starts with understanding market structure. So here we're going to look at how markets move and how you can interpret this movement to make better decisions in your trading. So let's just cover uptrends. In an uptrend, the market makes higher highs, higher lows. So this pattern will signal some strong buying pressure, or depending on the context, low selling pressure, as each upward move breaks resistance and each correction stops short of the last low while the uptrend's continuing. On the flip side of that, a downtrend, we're going to see lower highs and lower lows, and that's going to indicate increased selling pressure. So each downward move goes deeper than the previous one, and those rallies, they fail to reach the heights of a prior peak. And sometimes markets just pause. When you see prices moving horizontally with roughly equal highs and lows, it does not have to be perfect. It's called a consolidation. And it's going to look different on different time frames. Now, this period of balance between buyers and sellers, they often precede a significant breakout in either direction. We could also see price making higher lows, but then lower highs in an uptrend. Well, that indicates a consolidation. That trending pattern that we're looking for is not occurring. Now, for a trend to assert itself, it not only needs to create new highs or lows, but it has to do it with conviction. So a fast movement in fewer candles, that indicates strong market commitment, right? That's a critical clue for traders that are looking for a good entry point. Notice how several candles close past resistance. Well, that's a bullish signal. It shows that buyers are in control, and hopefully they're about to push the market to new highs. But you have to be cautious of false signals or failed trades, and it's going to happen. But a single candle testing a new high, that doesn't confirm a trend. That can actually turn into a short trade for an experienced trader, as those that went long because of the new high, or especially after a breakout, have to cover as price retreats from that level. You want to also look for multiple confirmations to assure you're not caught in a trap. You're also going to need a setup, as certain movements of price like consolidation under resistance, that can point to a higher chance of a successful breakout. Why is that? Sellers can't push price lower, and those that are interested in buying, well, they're not seeing lower prices. So buyers are supporting at that price. Now, really the best way to confirm a new trend, just wait for a retest of resistance. That'd be in an uptrend after that breakout. And look, you may not get it at times, and you might miss a big move, but a retest and then price continuation, that's a sign that the trend is intact for now. Also, if you see price racing from the bottom of a correction or a consolidation, and it breaks out, those usually fail, because that rush of buying that pushed price pretty far will probably turn into profit taking, because breakout traders, they're going to pile in long, right? So those that are already long, they're in profit, they're going to sell. You also want to keep an eye on the length of the leg. So once you start seeing those long trending legs begin to shorten up, well, you're watching the instrument begin to either reverse or consolidate. Now, a telltale sign of potential reversals is when that counter trend leg, they become larger and there's strong momentum inside of them, right? This is just a sign that those easy trades, they've come and gone, and you should be more selective in your trades. So I want you to think about this. So if you're long and those counter trend legs became more frequent and they're stronger, what would you do? You'd probably exit, or at least you would tighten up your stop, because it's clear that things have changed. Well, other traders, they're going to be seeing the exact same thing as you. Can you guess what they'll be doing? Yeah, probably the same as you. Understanding structure, it's not just about recognizing a chart pattern. Right? There's a fundamental structure that you need to know. It's about reading that story of supply and demand, momentum, and market psychology, which we can do just by looking at the structure of price. And when you learn to master this over time, you're going to set the foundation for success. In our next video, we're going to cover support and resistance. This is an absolutely pivotal concept that you need to know.
Everything discussed here is our opinion, and it is not to be taken as investment advice, because we are not your financial advisor, nor have we considered your personal situation as your fiduciary. This presentation is for your education and entertainment only. Please review NetPicks' full risk disclaimer and privacy policy.